I'm of the opinion that just, the best portfolio manager is just a good analyst, right? Again, as long as you know what's in the book and each individual investment in the book is good, you have your work cut out for you as a portfolio manager, right? Whether you make a position, a 7% position, another position, 3% position, if they're both good investments, it doesn't really matter, right? And I think that's the most important part of being a portfolio manager. And that said, I have certain things that I do that I like to do that makes me sort of more comfortable, just a style. I tend to not make a lot of small caps, 5% plus positions. Just been a little bit burnt with small caps in the past. I don't like the illiquidity. And so I tend to make large caps, larger positions. On some of the shorts, when we're actively exposing a name, we'll build an oversized position in it. Other investors aren't comfortable with taking on these oversized short positions. I've gotten the sense that the company's a fraud and we're actively exposing it. Having an oversized position is fine, right? From an exposure standpoint, I like a little bit of leverage. So we get to maybe like 130 to 150% gross leverage. I just feel like that's not going to really blow up the fund, but it'll allow us to sort of get more returns and just get more investments into the book. If we think that all of our investments are great, it's better to have 150% gross exposure than lower exposure. But we're not going to take that to an extreme and take it to a 250% gross exposure because that's a little bit too aggressive. I like high net exposure. In most markets, I think that markets in general are going to be going up over the next 5-10 years. I think central banks will always be printing money. Under the current international monetary system, don't really want to hold a lot of cash. And I think if we're not finding great investments because of valuation levels or for whatever reason, we'll own names like Colgate. Colgate's like an 8% position for us. I'm not going to get rich off Colgate, but I'd much rather own the world's leading manufacturer of toothpastes and various consumer products versus cash. So we do a lot of that. And so, I think I like to be a little bit more diversified. I think some value investors out there like to have, 20 core investments that are 5 to 10% positions each. We have a lot of these sort of straggler 1 to 2% positions that, we've gotten some conviction on in the past, just not enough conviction to make them larger. And our inability to track them all as close as we'd like is mitigated by the fact that they're 1% positions. And so, the way in which we're losing out by not being fully on top of the name isn't going to result in big losses to the fund. But it's sort of a collection, they end up doing fine.